Now, the South African Customer Satisfaction Index by research company Consulta shows that traditional banks face intense competition from new players in the industry. With the technical advance in the banking sector, customer expectation continues to increase. According to the index, Capitec is doing its clients justice and understands the needs of its customers. Cobus Barnhorst is a client executive at Consulta, and he joins us now in studio to discuss the outcomes of this report. Cobus, good afternoon. Thank you very much for joining us. Let's talk about Capitec. What is it getting right that the other big retail banks are not?
Look, they got it right from the beginning. It's about 5 years that we've been measuring the banks through the SACSI, and they've been leading from the start. So they identified a niche in the market in terms of providing a low-cost service, but also in terms of simplicity and convenience to customers. They don't have the bureaucratic infrastructure that the traditional banks have been coming with through all the years that they've been established, and they set up their systems and processes that allows customers to find the service, to get the service inside the branch and digitally that they require quickly and efficiently. And the other banks are struggling to catch up to them.
We've got a whole bunch of new banks coming out this year. We've got Discovery Bank, Bank Zero and Time Bank. Should the big six be apprehensive about the entry of these new banks?
Yes, definitely. Our research shows there's about 20% of customers that are defectors at risk of, they are at the stage where they are indicating they're not going to be loyal to their bank much longer. They're not satisfied with the service they're receiving. And then you have about 9% of customers that are mercenaries. We call them mercenaries. They are fairly satisfied, but they've also indicated that they are very likely to move to another bank should any viable option comes along. So that's around 30% of customers that are really at risk sitting in current banks. So with the emergence of new banks and new options, I mean, those are easy targets for them, and that's a big chunk of customers to lose if banks were to lose those customers.
But would it be tough, though, to kind of for these new banks to break into the market? How will they gain market share, not only from the traditional banks, but they're going to be competing against each other?
Yes. Look, it will obviously be difficult. A bank is a trust service. I mean, at the core of the expectation from customers is the safety and security, the fact that your money is with them, they protect your money, and so that trust typically takes time to develop. So it's going to be difficult. It's not just jumping into the market and building the business. If you look at Capitec, for instance, they started small. It was over 10, 15 years that they grew to the phenomenon that they are now. So it probably will take a while, but it gives the other banks some time. And customers are slow to change their banks. That's a difficult task to do. People are sometimes reluctant just to change banks simply because it's such a big step. And that's a good news for the traditional banks and a bit of a challenge for the new banks. But with their digital options, they're going to make it as easy as possible for customers to join. But it's not as easy. They've got a big task ahead of them as well, yes.
So the other banks are lagging behind, but are they trying to catch up? Have you seen any movement in the traditional banks trying to catch up?
No, for sure. I mean, I don't think there's any bank that does not understand the digital future of banking. They're all investing heavily into that. I mean, the difficulty for the traditional banks is just the infrastructure that they are currently sitting with. That is where you've seen Standard Bank recently close a number of branches. They know where the future is going, but they are sitting with their current infrastructure. It gives the new banks an advantage. They're going to struggle to quickly build new customers, but they can start fresh with the digital future in mind. So that's their advantage again.
And did you see any improvement? For example, ABSA has been lagging behind for quite some time now.
Yes.
It's just rebranded itself. Is that working for ABSA?
It did. It showed a big jump for them in their satisfaction score. They were slightly declining over the years, so the brand certainly helped them a lot. The challenge for them will be to to bring substance to that brand change. Customers are excited, their expectations have risen, and along with that, their perception of the service, their satisfaction, but they ABSA will have to step up and make sure that the delivery of their service and the experiences customers get when they interact with ABSA meets this heightened expectations and this new brand that has created this excitement. So they need some work to do to ensure that, yes.
So you're saying customer expectations are increasing. What is it that customers want now that, for example, they didn't want before?
Yes, I mean, we've seen this trend for the past 5 years. Customer expectations are increasing. They are increasingly, safety and security, definitely a key priority for customers. That is something that they want. Capitec has changed the game. So low prices, don't try and do customers in, but low prices, and then also convenience, efficiency. People don't want to, it's not fair to customers for them to stand in queues for long periods of time. That Capitec has come and produced that expectation as well. And then knowledgeable service and advice. People want to, where in the past people went into branches to do transactions. Now when they go into a branch or speak to someone or interact with a branch, they want knowledgeable, trusted advice that can help them with their finances, that's got their interest as a customer at heart, and will help them with their financial future.
Thank you so much. Cobus Badenhorst there talking to us about that customer satisfaction survey.